When an account is bleeding, the instinct is to look outward. You add another indicator to your chart, scan for a new setup, or force a trade on the next breakout. You look for better opportunities rather than looking at your execution. TradeZella takes the opposite approach. It operates as a second brain for your trading data, a high-fidelity diagnostic tool designed to pinpoint exactly where your specific decisions are costing you money. But getting access to those diagnostics requires a commitment. The software costs between $348 and $588 a year. There is no free tier, there is no trial period, and they do not offer refunds. You pay upfront to get through the door. That pricing model forces a practical question. Does this platform offer a mathematical edge, or are you paying a massive premium for a glorified spreadsheet? To answer that, we are going to run a reality check. We will map the software's 10 core features to show exactly how much daily effort you must put in to extract the advertised results. The path out of a break-even cycle depends on isolating specific variables in your execution, a process that starts with the data-driven logic we're about to deconstruct. Everything starts with the trading day loop. Phase 1 is data capture. Features 1 and 2 handle your journal and auto import. You establish a direct API connection with your brokerage, or you upload a CSV file of your trades. That creates a perfectly accurate, holistic database of your performance history. Every ticker, timestamp, and fill price populates immediately. You do not have to spend hours typing entries into Excel. If you trade funded accounts, this phase also includes prop firm sync. This tool pulls data from FTMO, TopStep, or Apex, consolidating multiple evaluation accounts and their specific drawdown rules into one single financial dashboard. The trade-off here is entirely dependent on broker API stability. If your broker's connection breaks or requires constant reauthentication, which happens often with some platforms, you will have to rely on manual CSV uploads, bringing friction back into your daily routine. Perfect automated data capture eliminates the excuse of laziness. Your history is there. But compiling a pristine ledger is useless unless you move that data into a structured review. That brings us to phase 2 of the loop, post-session review. This relies heavily on feature 4, trade replay. To make this work, you have to spend 15 minutes after the market closes, sitting at your desk, using a tick-by-tick slider to physically re-watch all your past executions. It strips away hindsight bias. You don't see the completed chart where the exit looks obvious. You see the price action and the order flow exactly as it looked the second you clicked the buy button. The psychological trade-off is steep. It requires ego detachment to sit quietly and watch your worst panic-driven mistakes unfold in real time. Once you feed the system consistent daily data for at least 30 days, advanced analytics start to populate. You isolate specific days that drain capital, like how this chart shows heavy losses on Fridays against gains on Mondays. You stop guessing about your edge. You calculate your true risk-to-reward ratio and identify the specific habits that are quietly draining your account. But deep analytics carry the risk of analysis paralysis. You can apply so many microfilters to your data that you convince yourself a loss was due to an obscure market condition, rather than admitting you just failed to follow your own rules. To prevent that, Feature 7 enforces mistake tracking. The input here is brutal honesty. You have to manually tag your own fatal flaws, labeling a trade as FOMO or revenge trading immediately after closing the position. The dashboard cakes those tags and assigns literal dollar amounts to your bad habits. Seeing that your lack of discipline directly cost you $4,000 in a single month changes the equation. Attaching a hard financial penalty to a vague emotion forces you to correct the behavior. The final phase of the loop is strategy validation and growth. Feature 6 introduces playbooks. The required input is doing the heavy upfront work. You must sit down and explicitly define your A+ setups, your strict entry criteria, and the exact market conditions required to take a trade. Playbooks create repeatable parameters that eliminate mid-trade guesswork. The trade-off is that strict parameters severely limit your daily action. It builds immense discipline, but it is incredibly boring if you treat the markets like a casino. Once your playbook is defined, Feature 5 is backtesting. You run your theoretical strategies against more than 10 years of historical market data. This mathematically validates whether an edge exists before you risk a single dollar of live capital. However, backtesting cannot simulate the psychological pressure of holding through a live drawdown. The math works, but you still have to execute it. Features 9 and 10, Zella University and Mentor Sharing, provide built-in courses and journal sharing links to accelerate your learning. But keep in mind, self-directed education without applied execution is just entertainment. Possessing mathematically validated rules and the historical data to prove them is the exact dividing line. That is what separates systematic professional traders from hopeful gamblers. TradeZella will not place winning trades for you. It acts as a comprehensive mirror, forcing you to confront the hard data of your own execution. This matrix identifies the exact audience for this platform. The check marks belong to active day traders, futures, forex, and crypto traders, and those currently unprofitable traders who desperately need structural playbooks to survive. For prop firm traders specifically, the native ability to track multiple evaluations and distinct payout rules in one dashboard makes this tool unrivaled. If you fall under the red X, casual buy and hold investors, swing traders who execute a few times a month, or anyone requiring a free tier, you must avoid this platform. You are better off using the free version of TraderView. Do not pay the premium subscription fee if you are unwilling to put in the 15 minutes of post-session review work every single day. The data alone will not save you. If you are ready to treat your trading like a structured business, use the 20% off link in the description to get started. Achieving professional-grade results requires this level of feedback, making that annual fee a primary tool in a trader's risk management arsenal.